Good morning, and welcome to your Stock Sense Morning Brief from Monday, December 15th, 2025. We're diving into the latest market action from the PSX, reflecting the strong close on Friday, December 12th, where the KSE-100 index made a significant move, nearing the key 170,000 mark. On Friday, the KSE-100 index demonstrated robust performance, climbing by nearly 1,300 points, or around 0.8%, to settle just under 170,000 at about 169,900 points. This positive momentum followed its previous close of roughly 168,600 points. Trading activity was notably significant, with volumes reaching approximately 873 million shares changing hands. The total traded value for the day stood at an impressive 40.9 billion rupees. Market breadth leaned strongly positive, with 259 advancing scripts outpacing 180 decliners, while 43 remained unchanged, indicating a prevailing bullish sentiment. Turning to sector performance, we observed a mixed but generally positive impact on Friday. The automobile assembler sector noticeably exerted downward pressure on the market. However, both the fertilizer sector and oil and gas exploration companies provided significant upward thrust, acting as key drivers that helped push the overall market higher. From a technical perspective, the market continues to exhibit a strong bullish outlook. While most key moving averages are signaling a buy action, reinforcing positive sentiment, it's worth noting that the Ichimoku baseline shows a neutral stance, and a Hull moving average indicates a sell signal. Our pivot points suggest immediate resistance around 170,000 points, very close to Friday's close. On the support side, we're looking at a crucial level near 160,000 points. On the corporate front, several companies have upcoming board meetings to consider matters other than financial results. These include Sinari Bank, Fauji Foods, Cyan Limited, Dawood Lawrence Poor Limited, and DH Partners Limited. As for last day entitlements, there were none reported for today. In macro developments, we heard positive news regarding the IMF program, with the Finance Ministry clarifying that targets are part of a continuous reform process, not abrupt conditions, which should help ease market concerns. This clarity, coupled with a $1.2 billion IMF disbursement, played a role in propelling the KSE-100 to new highs, reflecting stronger investor sentiment and improved liquidity. Additionally, the FBR's crackdown on tax evasion in the tobacco sector, including sealing godowns in Peshawar, signals a more aggressive stance on tax enforcement. This is generally seen as positive for government revenue and for compliant companies. However, some notable concerns also emerged. Reports suggest that a significant 40% of tax returns declared nil income for tax year 2025, highlighting persistent issues with tax evasion. There are also worries that Pakistan's investment to GDP ratio might fall below 13%, signaling a potential decline in investor confidence. Furthermore, staff reductions at the Federal Seed Certification and Registration Department have sparked fears of lower crop yields, which could impact the vital agricultural sector. Meanwhile, Finance Minister Aurangzeb has reiterated his vow for a broader crackdown on tax evaders, indicating a wider push for fiscal discipline. Moving to institutional flows for the period ending December 12th, we observed some interesting dynamics. Foreign institutional portfolio investors, or FIPI, were net sellers, offloading shares worth nearly $2 million. Conversely, local institutional portfolio investors, or LIPI, absorbed the selling pressure, emerging as net buyers by roughly the same amount. Breaking this down further, banks and development finance institutions were the strongest net buyers, adding about $8.8 million to their portfolios. On the selling side, we saw significant net outflows from individuals, foreign corporates, insurance companies, and mutual funds, each divesting between about $1.3 to $1.7 million. This suggests that local institutions, particularly banks, stepped in to balance the market against foreign and individual selling. My take on the market is that Friday's robust performance clearly highlights the resilience of the PSX, pushing towards that significant 170,000 mark. The strong local institutional buying, particularly from banks, suggests a continued confidence in domestic equities, effectively counterbalancing foreign and individual selling pressure. However, it's crucial not to overlook the underlying economic signals. While the clarity around the IMF program is certainly positive, ongoing concerns about persistent tax evasion, the declining investment to GDP ratio, and potential agricultural impacts from seed watchdog cutbacks all warrant close attention. Investors should keep a keen eye on how the government's tax reform initiatives progress and monitor broader investment trends, as these will be key indicators for sustained market growth. That's all for today's Stock Sense Morning Brief. Thank you for tuning in. Remember, the information shared here is for educational purposes only and should not be considered investment advice. Always consult with a qualified financial advisor before making any investment decisions. Until next time, happy investing.